Good morning, Ed here on the 15th of April 2020, doing my new daily update for Bitcoin, looking what's happening in the market and trying to find a trade plan for today, all trying to do in the maximum 10 minutes. Usually I don't get that, and I do it a bit longer. But I hope it's useful for you, and it gives you an insight on how we update our members and trade with them every morning. And during the day when things are changing, market is changing, we do update a very big list of altcoins and also the major coins, and try to find trade setups for our group. And so this gives you a bit of an insight. For those who are new, because I'm now also posting on YouTube, you should follow my Twitter account. I will post a link below in the description, because during the day I usually post updates on Twitter. Now let's go to the charts. Yesterday I showed you this chart, this rising wedge, and the possibility of one move lower towards 6,200. It still looks on this chart like that is the most logical thing to happen. It would be, this is what I showed yesterday, this ABC to the downside, 6,200. But I changed my mind yesterday during the day. If we go back to yesterday, when I made my video, then we were dropping here. But then we did get, we were dropping here, and I said, like, wait for a bearish flag and then we can short to the downside. But there was no bearish flag. It kept moving, and it even made a new high here. And studying that pattern, I became a bit more bullish, and I'll show you why. We did have the dip into that liquidity zone over the weekend, and that was what I warned for on Friday. And that looks like a brutal move, and expecting continuation to the downside. But this move happened over the weekend when the volume was very low. So it only takes a few bigger sells over here to trigger a lot of stop losses to the downside of people who are just celebrating Easter and are not watching charts. And this happened very quickly. And then, yeah, it dipped in the swing failure pattern into that liquidity zone. And then it stayed above it here. It dipped one more time, but no continuation to the downside. Then yesterday over here, again, no continuation to the downside, even making a new high. So when I look at it, you could also say, if you want to apply Elliott wave, this is a 5 legs move to the upside. And you know, in Elliott wave, the trending moves are impulsive and are 5 legs, do have 5 sub legs. The corrective moves often have only 3 legs, an ABC. So I do see here 1, 2, 3, 4, 5. I cannot make here a valid ABC correction. That would be in the case we get more downside. Then we should see here an A, B, C, and then continuation down. This, to me, this looks more like a impulsive move to the upside, followed by a correction. It's also what I posted yesterday. This was in our group. Yeah, this is a little joke. But here, 1, 2, 3, 4, 5, and then an ABC correction. You see here, 1, 2, 3, 4, 5, now ABC correction. This is what I updated on Twitter, and yeah, that's working out. We are now in that correction. Might be over or not. I do think we can see one more leg to the downside in this move. That would be like here, A, B, C. And then a bounce to the upside. Also, worth mentioning, this move to the upside didn't have bearish divergence. Look here, from 3 to 5, it made a new high. Usually when more downside is coming, you should have seen here a bearish divergence, and that this top was around here. So another little sign, small sign for me that we might not go down and are already starting to go to the upside. Let me see if I said everything about this chart. Dropped on low volume, yeah. So now I go to my chart, which I use for trading. My ranges are like this. Range high at 7,000. This is the dip into that liquidity. So I am now gonna wait either for what I showed you before, this move. I will update later where I do expect a bounce exactly and where the green box will be. So if we do get this move down during the day, also looking corrective, then I will look for a bounce area, and as soon as we bounce, I'll look for a long to the upside. Other possibility is that this was already the correction and that we now go up, and then I will look for a break of 7K, a retest, and then to the upside. So either looking for a long from here towards the previous top, but maybe much higher, but this is yeah, this is more like an intraday trade. So then I'll look for that move. If we do get a move lower, as I said, like this, as long as we do not break this top, we have the risk of making this move. And then I will look for the bounce and enter like this, with stop below the Fibonacci 1.618, but that is what I will update on Twitter. That's what I see, what I do expect for today, maybe tomorrow. Also very similar and also a good sign is Ether in the dollar pair. It's also hugging with that resistance. Could make one more down, and then that would be an ABC like this. ABC would be a perfect retest of this support resistance. And if that happens and bounces, it's also a very good sign for your Bitcoin trade, because it's an extra confirmation that when this support is holding and bouncing to the upside. On the other hand, here also, and I think even Ether might be more interesting because it looks strong to me. If we do get a breakout earlier, breaking this top, retesting, it's also, you can look for it. It's heavy correlated. I always look at different pairs, Bitcoin, Ether, Litecoin in this case for Bitcoin trades. So if Ether breaks out, a retest, it's also a good sign for your Bitcoin trades. Ether Bitcoin also looks strong. Look here. Looks like it's breaking out of this correction and could move also higher. And that I think will only happen if we see Bitcoin in the coming hours, 48 hours, also moving higher, but not pumping. If Bitcoin starts moving up, Ether dollar will be also strong, and I think Ether Bitcoin will also follow. So you can all mix it together and look at the correlation for your Bitcoin trade. So that's it for today, guys. No, I forgot. two things. So I'm gonna exceed those 10 minutes. Sorry for that. The downside, as I changed my bias to looking for longs, I'm not directly interested in shorting here. And that is the other thing I wanted to mention. I made a mistake. I should have shorted yesterday. I will explain. For now, when would I be interested in a short? Only when I see this accelerating to the downside and strong candles to the downside and making breaking this level, and then I would look for a bearish retest, and then I would be interested in a scalp towards 6,200. As I said, I made a mistake. When we did move up yesterday and reach this range high, I should have shorted here. And that's a typical mistake I do have more often. When I have a certain bias that the move is going to happen in a certain direction, then I'm not looking to short or trade the corrections. So during the day yesterday, I've started to think, we're going higher. So we reached the range high, got a rejection, and dropped. This is where I should have shorted and just let it go, because it still would have been a nice 4.9 R, or maybe here, if we do make this ABC. And that's something you should also take care of. I should have watched just my ranges and shorted it, and then just look how far it goes. It's a little mistake, but I'm not afraid to show it. Nobody's perfect. I see many other people only post their winners and not talk about their mistakes. But I think this is a interesting mistake which I should pay attention to, but maybe it's also something that helps you. So if you change your bias and think we go up, I usually don't trade corrections, but I should have done it. And yeah, meanwhile, I could say I place my stop loss on entry, or just keep it very tight. And I would have had another day trade, which, yeah, yesterday when happened this, early in the evening, I was very tired at that moment. So I was not really paying attention, but this was a great opportunity to short. And usually, why I'm mentioning this, it happened to me a lot of times that this correction turns into a very big move to the downside. That happened, for instance, a couple of times. Like this is a good example. Where is it? Like here, this move in October, we did have that very that pump on one day when the Chinese news came out, and then over here I was looking for corrections. I thought, well, we did have such an impulsive move, typically for Elliott wave, impulsive move, and then a correction. So you would think, okay, we're going up again, and then look what happened. We went all the way down, and this move, I was constantly looking for bounces to the upside, and that's why I missed most of this move down, because my bias was formed by this impulsive move to the upside. Same here. My bias changed because of what I saw here, which I showed you. 1, 2, 3, 4, 5 correction. I'm not trading corrections normally, because in my opinion it's counter trend trading, so better to trade with the trend. But now I'm missing out on this, and it's a good reminder to do it different today or tomorrow. And so everybody learns every day. I hope this was useful for you guys. If you have any questions, post them below this tweet or on YouTube, and then I will respond. Thanks for watching. Have a nice day.